If you do your own taxes because you feel like your situation is pretty simple, you've probably explored different tax prep softwares. Like maybe you've thought about moving from TurboTax to something more affordable like FreeTaxUSA. If you're making that move, there is one very common mistake that I've seen dozens of people make that can be very costly. Now, I'm not a shill for TurboTax or any tax prep software, but there's just something that people really need to be aware of when switching tax prep softwares. So I'm going to walk through a real client case where he missed one small detail on his tax return and it cost him nearly $21,000 in extra taxes, which is way more money than he saved switching to FreeTaxUSA. So let's talk about Ron. Now, Ron, he always did his own taxes because honestly, his situation just wasn't that complicated. It was he and his wife, Tammy, and they were both W-2 employees. So pretty easy. He just did everything in TurboTax. But in 2020 and 2021, like a lot of people, he got into day trading. And, for a while, it seemed like anybody could buy anything and make money. Stocks, crypto, didn't matter. He was actually one of the original investors in Dogecoin, the original Doge, which it's funny thinking back on that now, like what a wild timeline we're in. If you told somebody back in 2021 that Trump would win re-election in 2024 and then he'd create this department that people would refer to as Doge and Elon Musk would be running it, I think nobody would believe it. Anyway, 2022, reality hit for a lot of people. It was a rough year in the market and Ron lost $93,000 in the market. And he sold that, so those were actually realized losses. Now, when you have capital losses, they offset capital gains first. And then if you don't have any capital gains, you can deduct up to $3,000 per year against ordinary income, like your salary. And then the rest carries forward indefinitely into future years until you can use them. And by the way, that $3,000 cap, it's been at $3,000 since 1978. It's like one of the areas of the tax code that just does not get adjusted for inflation. I think if you adjusted it for inflation, I calculated at one point, it was like $14,000 today, still $3,000. So in 2022, Ron used $3,000 of that $93,000 loss against his W-2 income, and then the remaining $90,000 got carried forward into 2023. Now, in 2023, a few things happened. Ron gave up day trading, most importantly, switched to index investing. He had some company stock vest, and he sold a chunk of investments to buy a property, and that generated about $100,000 in capital gains. Now, here's where things went wrong. So in 2023, he decided to switch from TurboTax to FreeTaxUSA. Here's the problem. He forgot to manually carry over his $90,000 in losses from 2022. The tax software doesn't know about those losses from prior years. It's up to you to manually enter them, especially when you switch platforms. So when he filed his 2023 return, those losses that he was entitled to weren't applied. And that meant he paid full tax on that entire $100,000 gain. And he didn't even realize it. That's the frustrating part about this is like he just saw a big gain, got a big tax bill. Okay, probably makes sense. But in reality, he had this $90,000 essentially deduction sitting there that went completely unused. And that cost him an extra $21,000 in taxes. Now, when he and I started working together in 2024, I reviewed his prior year returns. I always like to look at the past 2 to 3 year returns exactly for stuff like this. So we were able to amend his 2023 return, get those losses reinstated, and got him a nice refund check. So problem solved. This doesn't just happen with DIY tax preparers. I've seen this happen with CPAs as well. Like whenever you're switching tax prep softwares or you're changing accountants, there's this manual component to carrying over losses. And if it gets missed, you could be overpaying in thousands. And then once it's passed, you kind of forget about it. And it's just gone. You just lose those forever. And capital loss carryovers aren't the only place where this happens. There are other losses that you have to manually track and carry over as well. Net operating losses being one of them, like from business activity, or passive activity losses from rental properties. That's another common one. And those can cost you a lot of money if you don't catch them. Now, the good news is it's pretty easy to check if you have a carryover loss. It's just a little bit of a manual activity. So just open up your prior year tax return or past couple years and search for the word carry forward or carry over or unused. There's often like some worksheet in your tax return PDF. If you get the full return with all the worksheets in there, you should be able to find, there should be a place that indicates this needs to get carried over into the next tax year. So before you file your taxes, take 5 minutes to check your prior return because it could save you thousands. Well, thanks for watching. If you found this helpful, like, subscribe, and share it with someone who needs to hear it.